for the most part, there's not only big obstacles and big problems that you got to hit, but there's also the little day-to-day stuff that you got to keep up with. So, and it sometimes it grinds on you. And
Yeah.
so I like to say that the entrepreneurial journey isn't like a straight line up. It's sometimes like a corkscrew, and sometimes you end up going back, and then as long as you make the turn and you keep going, make the turn to go higher, that's the way to do it.
That's all right. We are here. This is the Real Estate Podcast. Michael Flight, man, appreciate you coming on. Hope you're doing well today. And just a quick intro, we're going to be getting into triple net lease shopping centers, retail centers that you're invested in and involved with at a deep level, blockchain, and super pumped, man. So thank you for coming on our show today.
Thanks, Matt. Really appreciate you inviting me. Really
Yeah,
honored to be here.
absolutely. Well, to get started, if you don't mind, wherever you want to start off, but we'd love to hear, how you got to where you are today. A quick overview of your journey, and then I'll dive in with some questions here and there, and we'll figure out ways to provide value for our listeners, get to know you better, and let you take the floor if that's cool.
Sure, no problem. I have been in the real estate business since around 1985. I was in college. I think it was around a junior or so in college. My brother and I went to a weekend nothing down seminar, and we figured out that if you don't have like a regular job and stuff, it's really hard to buy real estate nothing down. So I went, and while I was still going to college and finishing up my bachelor's degree, went and got my real estate broker's license and took a few elective courses towards the real estate broker's license. And one of them was real estate investing. And that was taught by a guy who ended up being a mentor of mine. And I worked for him rehabbing apartments in, different neighborhoods in the city of Chicago. From there, I graduated. My father died when I was a senior in college, so I was kind of under the gun to get a job. And I went out and became a commercial real estate broker. And when looking at commercial real estate, there's a long lead time in selling things. There's less of a lead time if you're doing, leasing, commercial property leasing. And what I noticed was that with retailers, you could potentially do, 5, 10, 15, 20 stores with one retailer if you developed a relationship with a retailer. So to give you an example, we had a tenant contact us yesterday on one of our properties in the Chicago area. And, the leasing agent gave them all the information for, the space available. And I was copied on it because they originally contacted me. And, and so I told the leasing agent to ask them if they're, company owned or franchised. And so we got a response back from the broker this morning, and they're franchised, but they're big enough that they're in multiple states, and they're going to do 50 stores, up to 50 stores in the Chicago market. So that's the type of thing, if, where I say you can make a lot of money in a quick, easy time versus going door to door, doing one office lease. But so that's how I got into real estate.
On that, I was on the flip side of that. I worked at a retail brokerage called Edge.
Okay.
And it was a pretty good, reputable firm. We had all kinds of clients. This was right out of college for me. And they showed me their tenant list sheet, and it's like Gold's Gym, Dick's Sporting Goods, Blaze Pizza, all these Advance Auto. And
Right.
So I was on the flip side where I was brought in as a junior broker, and I'd have those were some of my accounts. Advance Auto was one that was really active, Blaze Pizza, and Gold's Gym. And we would literally be on the exact opposite side. So I know exactly what you're talking about, where they would say, hey, we want to open, 6 stores between Austin and San Antonio in the next year. We would create these maps, identify trade areas, and then we'd zone in on them. And it was fascinating. It wasn't something that I loved. I don't think there's anything wrong with it, but to me, it was a little too corporate. Like, I wasn't out being entrepreneurial within real estate. I almost truly felt like I was working like within their real estate department.
Right,
And
because the dirty secret, and a lot of people don't know it, is that most of these national retailers only have a few people on their real estate staff. They used to have these
yeah,
giant research departments, like Sears had,
yeah,
demographics, but it's much easier to pull all that stuff down. But now they've subbed it all out to brokers across the country,
yeah.
and they can get a lot more stores done. And
It
then the
was,
other thing is, a lot of times they'll have like a national broker, and then they'll work with,
yeah.
local brokers like Edge and stuff. So
And it was
go-
super frustrating. It's to your point of like nothing against these people, but there were the real estate managers, right?
right,
And they made a salary, and they were good at knowing what their company did for the most part. I'm sure everyone's a little different, but it was like these guys, the ones that I was around, I was like, these aren't even true real estate guys. And they're the one that they're technically our client or our boss in a sense. And like Advance Auto, for an example, they'd come to town, they had a price they could pay at the time. It was like 550,000 in Austin for an acre, call it.
right,
And we would go, and most of the time the stuff we'd be doing would be off market because all these pads, there's not a bunch of them available where we're at. And
right,
so he would be like, call on that that 3-story office building and see if they'll sell. And I'm like, first of all, they're probably not. Second of all, we'd never be able to afford it. But I got to go and still get the
right,
answer. And it
right.
was so frustrating. I'm like, no, I already know this. They definitely will not. Like, let's
Yeah.
look at something else, So it was a really interesting way. And we had to do what they said, and we had to get the answers. I don't know if they knew it or not, or didn't care or what, but it felt like a ton of wasted time.
I think a lot of times they have to put together reports. So I will say that I've had relationships with some, tenant reps, and they move around a lot. So they might start out at Advanced Auto or a smaller company, and then work their way up. And then I've had relationships for 30 years with guys that like the head of Joanne Fabrics Real Estate. He unfortunately just passed away, but that guy was there probably for close to 55 years or so, and I knew him since the mid 80s, and he was just a prince of a guy. So it really depends. Some of them know real estate in the back of their mind, like there was a guy that there was a company that used to be called Fashion Bug, and this guy, and I'm not even sure where he's at anymore, but Alan Waxman. But you could mention a corner almost anywhere in the country, and he would tell you all the tenants and
That's
stuff.
cool.
And I have that kind of, I'm really more of a geographic memory, so I can remember who's where, and that's the way I remember it. But I've noticed with Google Maps and stuff, when you're not actually in the market, you don't actually drive the market, you don't really know it. And then the other problem is with the GPS now, you're really, like when I was driving, it used to be with a map, and so you'd know what the whole city was. Like you'd fly in, rent your car, and you knew where stuff was, and you draw it all out on a map, and you could remember, I could remember the stuff a lot better. With GPS, you're really not paying attention almost to the way you're driving, and you're really not paying attention to, so it's a little bit different. But it makes it a lot easier. You can do a lot more markets with, Google Maps and GPS.
Yeah,
So
that's a good point. Yeah, totally. And it's super important to kind of get the lay of the land and know where you're going. But you're totally right on. I think even myself, I'm in the GPS era, and some even unfortunately some places in Austin, I'm like, let me type this in and figure out how to get there. And when you stop using that and you step back, you realize, oh man, you can really get this down pretty quickly if you're just thinking about it.
right. I mean, and maybe it's just me, because I do know certain people don't have a sense of direction, but I would rather know, what direction I'm in. I would rather, and so I can even remember, foreign countries. It's like, oh yeah, that's, to the north, and that's to the south. And but it's just the way I'm built to think, I
Yeah,
think.
that's
So
cool, man. Yeah, I did that, retail world for 3 years, so I don't talk about it often, and so it's interesting to get back into it for a little bit. But so you obviously been doing this for a long time, and you were, doing this in the 80s. Like, how did things progress to where you're at, at this point moving forward to today?
Well, I got a job offer from a national syndicator in the late 80s. And they were based out of Philadelphia, and they owned about 270 shopping centers nationwide. And so I was doing leasing, asset management, and redevelopment for them in the
Yeah.
Midwest. And so I learned about things you were saying, like they tell you to do stupid things, on the tenant side, while working for the other side. And I can also tell you, working with, different partners, every once in a while, your partner will get a crazy idea. So anyway, with that, I learned, from the ownership side, how to do things and how to negotiate things. And I learned that the larger you scale, the easier it is to do your leasing, because you might have a really good shopping center here, and you might have a little bit of a lesser, stellar shopping center in a different market. But if it's a national tenant, you can say, well, let's do, 5 or 6 deals all together. We'll wrap them in. And so they really want the good, property, and you can kind of push them into the less than stellar properties too.
That's cool. That's really
Yeah.
cool. Yeah. So have a little leverage because
Well,
of the
and the
scale.
real estate guys, the other thing is, a lot of these tenants that are expanding need to expand, and they have, a certain amount of capital that they budgeted. And
Yep.
so they not only have to place that capital, but they have to open stores. And, Wall Street, if they're owned by private equity and they're going to be spun out, they need to open a bunch of stores to show sales growth. And Wall Street wants to see sales growth. And a lot of people, when they're looking at and investing in these, stocks, don't really pay attention to same store sales. They just pay attention to, oh, wow, the sales are really going up. The best metric for retailers is same store sales growth.
Yeah. Yeah. And I'm glad you touched on that. And I know all brokers, that are doing it and active, they know this and they experience it. But that was another one of my frustrations was, for example, Advanced Auto. We had all these deals lined up under contract, about to be under contract, going to committee and all that kind of stuff. Earnings come out, revenues down, no more stores, 13 deals of mine gone. I mean, it was
Yeah.
what would have been my whole year of, essentially a salary, or not a salary, but money making, gone.
Right.
And I
Right.
was like, wow, I didn't know. Like literally every one of them, they pulled the plug on. I was like, okay,
Yeah.
so it's fat. So yeah.
It goes back to diversification.
Yes. Yes. 100%.
And then the savings and loan crisis hit, and Texas was probably hit the worst by the savings and loan crisis in 1989, 1990, 1991. So a recession happened, and I was laid off. And from my relationships at the national syndicator, some of the people that I worked with went and, became the head of asset management for, some large insurance companies. Another guy that I worked with, who ended up being my partner for, more than 16 years, he went and got a job with it's a publicly traded pension fund consortium based out of Holland. And there were some other relationships that I had. So we grew our business rapidly. We started out in leasing and management, and then took operating positions and ownership positions in properties. So we were basically brought in, and we could earn into the property and bring most of so the other, partners would bring in the capital, be it an insurance company, be it a hedge fund. We've worked with family offices. One family office we've worked with now since 1990, so 31 years. We've worked with pension funds and all the rest of that stuff. So, when you talk about, well, they tell you to go out and, buy an office building, and it doesn't make sense. We have the same situation where every once in a while, especially dealing with a larger institution, they'll cycle some of those people through, and somebody will come in and they'll say, hey, this is a great, property. Why don't you go call like Barnes and Noble? And so at the time I'm like, well, since they're my partner, I don't want, them to know that I didn't call Barnes and Noble, but it's a stupid thing. So I had a friend who was head of real estate for Barnes and Noble. So I call him up and I say, hey, we have this property in a suburb of Chicago, and we've got this great, location here, but I know what your demographic profile is. And he goes, people in Berwyn don't read, so we're not going to do a store there.
Wow. Yeah.
So,
Yeah. You got to get that you got to have them answer on it so you can at least say they
right,
looked
but
at it.
there's also a fine line, because you don't want to be the guy that's sending out packages and calling up, tenants and saying, oh, I've got this great location for you, Neiman Marcus, and it's, in the middle of the hood. That's, you don't want to be that guy, because they're never going to take your call again.
Right.
So you have to explain to, your partners, or, your ownership groups, that there's a fine line between, maintaining a relationship, and you also have to maintain relationships with brokers. Because I just had somebody ask me, it's like, well, we have a relationship with them. Why don't we just call this other guy who's at the headquarters and talk to him? I'm like, well, there's a broker involved. So even though, and I've known this broker for, 25 years, I'm not going to call up the guy who I know, from the headquarters, because it's just bad form. And,
Yeah.
that broker's never going to bring another deal to your center if you've got a shopping center.
Right. Yeah. That's learning through experience and knowing the game, that all
Well,
that stuff comes into play.
the big thing in any real estate, no matter if you're doing houses and flipping houses, or if you're wholesaling, or, if you're doing multifamily apartments, or if you're doing, commercial real estate, corporate real estate, it's a relationship game.
Right.
And, I have had relationships that didn't go well, earlier on, and I, still can't get a deal done with those people. And then there's relationships that I've had, for more than 30 years, that, I can call them up on the phone and say, hey, what do you think about this? And they're like, I don't like that, but can you get me the corner across the street? And
Yeah.
so that's how you expand your business, through those relationships.
Yeah, it's fascinating, man. I feel very blessed that I learned that. I think I learned it through commercial real estate, because I couldn't get any of these brokers to call me back when I was supposed to get info. So I started meeting them, and then they would call me back. But I'm
Mhm.
in a position now, I'm a broker of a company here, and we're trying to grow. So we're always trying to meet new agents. However, I just want to go meet people. Like literally spend 85% of my time having coffee, lunches, trying to figure out how to add value, staying in touch. And when you're a true real estate person who's been around, you understand that value.
Right.
And so I will reach out to people, and they're like, hey, Matt, sorry, I don't want to join your brokerage. And I'm like, that's totally fine. There's a lot more that we can do.
Yeah.
Or why are you calling me? You're a broker. It's like, man, these people don't get it. Like, there's a million things happening. Maybe even though I'm a broker, I try to tell them, like, you don't think you see deals that I don't see, and I'm more than happy for you to represent me.
Yeah.
But that's frustrating, because, like, I don't know, it's so obvious when you get it. Like, there's a lot going on. There's ways to
Or maybe
co-broker,
that
whatever.
may referral opportunity. I mean, it might not be, your area of concentration. So,
Yeah.
you want the best for that client. So it's like, hey, I don't do office, or I don't do, industrial or something like that. But here's somebody that I know, Matt Teifke. He knows everything about Austin, Texas. Contact him, and, you're in good hands.
Yeah, exactly. So it's just interesting. I'm just venting on that a little bit, but it's
Oh,
cool when people get it. Cause like you said, and I do think that relationship and simplest concepts of, like, staying in touch, do what you say you're going to do, and be around, like, you'll go a long way in this business, but it takes time. Because when you're around, people are like, oh, Michael's here to stay. Like, he's not, there's all these fly by nights that I see. It's just an interesting dynamic.
well, and that's the biggest problem with real estate. I think, and especially what I see today, because there's way more access to information, and there's way more, everybody's a guru. and everybody's got a program, and everybody's like, has seminars and things like that. And all I see is, oh, I'm killing it. I got, 50 doors, 500 doors, especially in the multifamily. And it kind of cracks me up because I do go to some multifamily conferences, and it seems like everybody's the same GP and the same like 800
Yeah.
doors.
I got 5,000. You got $5,000. Like, you mean you have 0.001% of 5,000 doors, but you're going to claim all these doors.
Yeah, no, and so I mean, God bless them if they can make it work. But I'm really looking for, and I know some of the pitfalls with real estate. I mean, we have had, I'm not, and this is what I tell in all of our prospective partners. I say, we haven't had everything bad happen to us, but we have had so many bad things, go sideways. And we've worked them out that if we can't solve the problem, we've got an entire network of people that can solve the problem. Because, we've had, oh, you don't know, but we've had, environmental problems, from underground storage tanks to asbestos to, on one of them, they decided in the 1950s it was a good idea to like spray petroleum on the gravel underneath the base of the parking lot, so which leached into the water system. We had one with the national syndicator I worked for. It was downriver from a PCB plant, so they could never ever. What was funny was they continued to own the property, and they just stopped paying on the mortgage because the lender wouldn't foreclose on it because the lender didn't want anything to do with it.
Wow. Yeah. So you've been through a lot. Wow.
Yeah.
And I know it's it's a mix of like experience, but also time with like what you said, saving in loan crisis, the financial collapse in 2007, that era. What's interesting from my perspective is I feel like I've been doing this forever. I've been 13 years in, but I'm still like such a rookie in the sense that, and I know this is probably, and love to get your opinion, probably somewhat unprecedented, but like I started in 2012 and it's been good ever since.
Yeah.
And so as much as I want to say I've been around, I've been doing it, it's like I have no clue about this whole other world that exists of what happens when the deals stop coming. And then the weirder part for me is I'm very cognizant of that. I try to, learn from other people's mistakes and not just go get over leverage and do all these deals. And I don't want to be the guy that's like the typical, like, it ain't ever slowing down. But where I'm at, it actually feels like that. Like, we're getting a massive amount of jobs in Austin, a massive amount of people. It's still relatively affordable. And I'm like, I don't know how to go about this. Like, it seems like we're going to grow for 20 years, but history says no chance.
Point out how smart you are that you started 2 years in after a major downturn. So that's when stuff started taking off. And the other, brilliance of your plan was you were in Texas, especially Austin, Texas. So because that's really not the case all over the country. Where I'm at, Illinois last year lost 150,000 people. And and that was from 2019 to mid 2020. And I'm sure it's way more than that now. And they just seem hell bent on destroying the state. Cause they just like shut down the entire state and just, and arbitrarily picked certain, tenants to close and other tenants to leave open. So, as I pointed out to one of the local representatives that, where we've got a shopping center, I'm like, so you close down a guy that has, 40 stores, and most of them are in the city of Chicago. He's headquartered in the city of Chicago, but you allow Target, all that money to go to Minnesota, and Walmart, all that money to go to, Arkansas, and you allow, Amazon, and they're like, well, it's not an essential business. I'm like, clothing's not an essential business, women's clothing. I'm like, well, those people are still selling women's clothing.
Yeah. Yeah.
So it's entirely arbitrary. These poor guys in the restaurants too, they've been getting killed.
Yeah. Yeah. You're right. Yeah, we're lucky we're not experiencing that at any kind of level, honestly. Well, it seems like it here. I mean, everyone has their own opinions, but we're allowed to get after it. And
No,
we call it.
like I say, I just think that you're seeing, you literally are, and it's shown in demographics that there was an accelerated migration from northern states that were closed to southern states that were more open, and a little bit more freedom to make your own decisions.
Yeah. Yeah. I hear you completely, man. Yeah, we call it Opportunity City here, and I feel
Yeah.
very blessed because it does seem like all these people are coming and jobs are coming, and that's the fundamentals, right? It's the
Right.
jobs. Everything
Well,
follows the jobs.
and taxes and pro growth,
Right.
because that's the other thing. I've had deals. We worked on a deal in California for, I can't remember now. I always, the stuff kind of molds together, but I believe we worked on this deal for about 7 years, in Santa Barbara, California. And it finally came down, and I think it was the city came down, but we had to go through the coastal commission, the city and everything. And then they came back with a $3 million traffic mitigation fee. And I'm like, and we had, Target, Best Buy, it was just a, phenomenal deal. And I'm like, well, what's the traffic mitigation fee? And it's like, well, nobody pays it, so it doesn't get built, so it mitigates the traffic.
Wow.
And we've had other stuff. I mean, in the Northeast, their zoning is just prohibitive. So they write the zoning laws so that you automatically have to go in and get permission from them. And then they, get in the middle of everything else you're doing because you have to ask them permission. So, and it's a lot different. On the West, Nevada, Texas, Florida, they're just much easier to work with, and they realize that. Oh, and the real estate taxes are lower in the Northeast, and especially, Chicago area, some of the highest. And don't tell me about Texas real estate taxes, because, ours are way higher than yours.
Yeah. Well, let's give a general overview to the listeners of what it is. You've given some of your background, and obviously I think we could probably talk real estate for 10 hours. An overview of what you're doing. You're buying shopping centers with investors. Is that a general statement correct? Like what makes you guys different? What's your approach to overall, growth within real estate in your business?
Up until 2019, early 2020, we were also buying value add shopping centers. And so we were looking at that. In starting in around 2018 to, full-time 2020, we're more buying single tenant triple net lease properties, because the evolution, and especially accelerated after the COVID pandemic, the evolution is for tenants to get out of malls, out of inline spaces, and out right next to the road where there's high visibility. There's, signs that are like billboards, there's like branding opportunities, and they can control, people coming in and out. And so they don't have to worry about, is the mall closing right now? Is other tenants closed right now? And especially attractive, and it just, again, accelerated 1,000% is drive-throughs. So tenants that you've never ever would have imagined, a drive-through right now, Dollar General and Dollar Tree are both looking at, adding drive-throughs to some of their businesses. So
Wow, that's interesting.
yeah, and that was a trend that started with the drugstores. They started coming, Walgreens and CVS started coming out of, an inline space and moving out to the out parcel so they could get that drive-through.
Yeah. Well, I remember that was one of our hardest things, is finding those drive-throughs for some of our clients. But with real estate being the way it is, it really can go all these different directions. You could, start to management and whatever it may be. Do you have any kind of struggle or challenge or thoughts on, you're buying these single tenant triple net leases? Hey, we should go build and develop these, or is it like, hey, let's stick to what we're doing and not get sidetracked? How do you view stuff like that?
There are organizations out there that are phenomenal at building and selling, and they typically have a relationship with the tenant. And just like the real estate guy that was telling you, They go out and find the properties, they go out and get them zoned, they go out and build them. And they have that stuff down. It's never been something that we have done. We've developed probably 2 or 3 properties total. We have a lot of expertise in major redevelopment. So we've taken 900,000 square foot enclosed malls, 600,000 and 700,000 square foot enclosed malls, 3 of them, and actually demalled them. So one of them we made it kind of a strip center, but kept the mall on the back. The other 2 we just completely emptied out, built around the periphery, and then knocked it down. And then one of them, was a Walmart, and the other one was a Costco. So that's, the type of stuff that we do. So
Yeah.
we have the most expertise. And what I really like is buying existing properties, because you've got immediate cash flow.
Right.
With development, you've got to feed the cash flow, potentially up to, 2 or 3 years, depending on how tough the development is.
Right.
So I much rather prefer, and I think, to taking investor money, it's much better for them if you can get, money out of the get-go. So we're
Yeah.
buying existing Walgreens, existing, CVS, existing medical retail properties, existing, we love convenience stores, that type of thing. So
Yeah.
because you get immediate cash flow, it's better, in some respects than even value add apartments, because you're buying at slightly higher cap rate, like in Austin, what's an apartment going for now, like a 3 or 4 cap?
Yeah. Yeah.
So,
Seriously.
yeah, and so we can buy some better positioned, smaller deals with a single tenant triple net lease, and out of the box get 6.5 cap, and that's pure cash flow. And then we're buying them with the knowledge that either the rents are going to increase, or we're going to increase the rents at expiration, because if that tenant doesn't want it, we've got relationships with other tenants that would take that space.
Yeah. 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 And on that, I worked with some of those build to suit developers for those retailers. And I know exactly what you're saying. I mean, they would do well, but it would be 2 years, 3 years. And they would actually sometimes have that same problem where they pull the plug on some of these deals. It was
Yeah.
fascinating though that, once you do have that relationship, you get almost get a signed lease before you close the lands. I mean, it's like same time almost, and it's like, all right, well, Advance Auto just signed a 10-year lease. I'm good to start building this project. But I totally understand. That's why I asked, is like there's these rabbit holes you can go down, and you might as well not if you got your own deal figured out, especially if you're paying investors back, right away.
Yeah.
Take a little less risk, probably maybe a little less profit. I don't know. It depends.
No, you're not going to get the profit that you would get the development, but you also, on the spectrum, there's like core properties, which are like major metro areas. They're the best tenants, they're long-term leases, and they're just like buying super conservative bonds. And then what we're doing would be called core plus properties. So they're not always in major markets. Some are major markets, some are in secondary markets. We also, will take a little bit of lease risk, because we have been operating retail properties for so long that we know whether we can release something, and we know if we could release it. See, the other thing is certain people are like, oh yeah, I'm going to buy this, and if they expire, I'll just replace them. It's like, well, some of those Walgreens are way above market, some of these towns, and some of those,
Yeah.
Dollar Generals that you're seeing that are a 7 cap, some of them are, way above market, and you're never going to replace that rent. So that's
Right.
the type of thing that, comes in with the core plus experience. And then the value add is, or development, which it would be opportunistic. That's, something you might not get paid for, 2 years and be feeding it with a lot of cash. And then you get a nice, pop at the end. So,
Yeah.
one of my, good friends, and he's on the board of Liberty Real Estate Fund, our single tenant triple net, lease real estate fund, Alex. yeah, he has developed, build to suit properties from Alaska all the way down to Puerto Rico. So, we've got the capability if we ever found that opportunity. And he also was the president of one of the largest, publicly traded net lease property REITs in the country. And he actually developed while he was there because he was so familiar with the development part of it. He did a bankable takeout. So he would work with developers that were developing property and say, we're going to negotiate a built contract that will buy this property once you get it developed. And so then the developer could go to the bank and get, probably like a 95, 98% loan to value loan to build their stuff.
That's great. Yeah, that's
Yeah.
super cool. So talk to me about how you are incorporating blockchain. I mean, you've been doing this since the 80s, right? Blockchain wasn't even a word back then, I'm sure.
Blockchain was not a thing.
Yeah.
Yeah,
So how do you, like, what gets you, you're an old school real estate guy. Like, how do you start getting into blockchain?
I was hanging around a bunch of really smart friends, and that's, gets back to, and I was hanging around people that weren't necessarily in real estate. But a lot of the people were in different, I've always been in, worked with different organizations for how to create human flourishing through poverty alleviation. And so a lot of those people were also tended to be, on the libertarian or, pro-freedom movement. And so they started mentioning, one guy mentioned Bitcoin to me, I think around 2000, I can't remember dates that well, but it was probably around 2014. And it just went right by me. And then in 2017, there was this thing called, the ICO boom, and there's people raising like hundreds of millions of dollars, and then all they had was a website. And I'm just saying, this doesn't make any sense. And I even said that Bitcoin didn't make any sense because I didn't understand it back then. But it's like, this is all backed by mathematics, which basically ends up being fiat currency. Why wouldn't you do a stable coin based on real estate? Because then you've got the stable coin based on, actual physical assets that are cash flowing. Yep. And so that's combining that with the net lease properties, which we like to describe as bonds wrapped in real estate, because they're the most secure properties that you could potentially buy. And you're going to just get stable cash flow. So I'm like, why not take and marry net lease properties with the blockchain ability that you've got tradability and liquidity. Yep. And put those into a real estate stable coin. So that's how we got down that road, and figured out very quickly that you couldn't do an ICO because it was illegal. So we're doing what's called a security token, which is tradable, SEC regulated securities offering. So we're just doing a fund. It would be like any other normal real estate fund that anybody would invest in, a 506c fund. But Liberty Real Estate Fund also has this additional investor benefits that with it, after a 1-year lockup period, an investor could actually sell or trade their token and, move into something else if they wanted to. Plus there's, all kinds of other options. I'll leave it at that, and then we can get into that.
Well, so it's kind of, correct me if I'm wrong. Essentially, it's kind of like having your own REIT, but you don't have to go through all these other steps, right? Because it's like you're basically allowing private real estate to now be kind of like public real estate in the sense where you're just more liquid on your investment. Is that a fair way to view it?
Exactly, because it's private real estate. So you're not going to probably have the liquidity that you would have with a REIT. I don't think that you're going to get tremendous liquidity where people are going to be trading in and out of these and day trading in them. But you're going to get the ability that you can manage your money and you can own, and control your assets much better than if you just had a paper share.
Yeah.
So, and then the other benefit is that regular publicly traded REITs, all that income, goes on top of your existing income. So if you're in a high income tax bracket, that gets added onto your income as like regular income. So you're paying extra taxes on that. They're just punishing you on that. And any dividends that you get, you're being taxed at the highest rate on that. And a lot of with this, it's private real estate. So the fund takes advantage of the depreciation on the properties. So you're actually getting higher cash flow, but it's a tax advantage cash flow.
Yeah,
So
that's great.
I like to compare these to, bonds. If somebody's investing in municipal bonds to, do something that's tax advantaged, why would you do a municipal bond, that's like 2 or 3% when you can go into real estate, that gives you the ability to get like 6 or 7%.
Yeah, 3 times as much. Yeah.
Yeah.
That's cool, man. I'm super fascinated. Are you guys, would you say that you're kind of leading the charge on this? Are there other people? It doesn't seem like there's many doing this.
There will be a lot more in the coming years, but right now it's been a struggle. So it's because I think, especially when people equate it with cryptocurrency, they're like, oh, cryptocurrency, that's scary. That's, you're using it to buy drugs. Is it legal? And all the rest of that stuff. So there's a hurdle there. And then there's the other hurdle that, the people that are in cryptocurrency look at real estate returns and they're not high enough. So, because people that are investing in cryptocurrency expect everything to get like a 10,000% return, which, and I've heard it before. It's like when moon, it's like, this isn't going to win moon. But if you're looking for something that is going to be consistently there and not, 50,000, on one day and then, down to like 2,000 the next day, you might want to take a look at real estate.
Yeah. I'm not following. You said when moon. I don't know what that is.
It's what the crypto guys would ask me. So it's when is it going to go to shoot to the moon?
Oh, when to the, oh gosh.
Yeah.
Okay, got it.
Is it a moon shot?
Weird times, man. Yeah. I like blockchain. I like crypto. The more I learn about it, the more I like it. It's, who knows? When I first thought about it, all I could think about was tulip mania, if you've ever heard of that.
Yeah.
And then over time, I'm like, wait a minute, maybe not, so it's just fascinating.
Well, I think if you divorce all the, there's some crypto projects that I really do like Bitcoin, and I do like other crypto projects for the fact that they, Bitcoin is like a digital gold, and there's other ones that are going to be the next AT&T and Verizons of the world, because AT&T and Verizon have networks that, transfer communications. And some of these larger projects like an Algorand or an Avalanche or Solana or Ethereum.
I like Algo and Cardano.
Yeah. And those are built to transfer value. So just like you could, today do a text and communicate, at some point in the very near future, you're going to be doing a text to transfer value, whether it's buying an asset, whether it's, me sending money to you. It'll all be done on your phone. And it'll just be like, I can buy, a piece of an office building in London for $50, and I can just do it on my phone right here. And that's the underlying technology of blockchain allows you to do that.
Yeah. Yeah, man. It's fat. Algo is one that I bought, and it literally pays you every day.
Yeah.
And I'm like, man, either this is the greatest thing ever, or it's a great scam, because it's showing me that I'm getting paid every day. I've never seen anything like it. It's like I'm getting like $2 a day, but it feels pretty cool.
Yeah, no, and the other thing I really like about Algo is for financial assets. It's great because the transaction fees, we were going to issue our security token on Ethereum, and the transaction fees on Ethereum, they started, the people that are securitization platform Securitize, they're like, we were covering the fees to like do the issuance, but now you're going to have to do that. And with Ethereum, if you've got 800 investors, it's going to be around $600,000. Like what?
Yeah.
So, and then we started looking at alternatives, and Algorand and Avalanche both are widely decentralized. They're great projects. Algorand especially has a really top team behind it. and they are less expensive and faster than Ethereum to transact on.
That's cool. That's
So
super
we think
cool.
it's like perfect for real estate.
I'm gonna go buy some more algo. Well, hey man, I think we might have to do another one because we could keep going and going and going. But I really appreciate your time, and I guess two things. One piece of advice for entrepreneurs, could be anything, and then two ways that people could get a hold of you or get involved in things that you have going on.
Sure. Well, I would say that I want to be as positive as possible, and you need to have a positive mental attitude. You need to have a positive mindset, but it's not all roses and sunshine. It's there's times when you're on your last. Where am I gonna? How am I gonna make this payment? And there is up and downs. There's cycles. We've been. And we just got a little bit of a taste of it last year, but we've been on, the longest bull run, but there are, things where, stuff comes up. So I would say that you have to prepare yourself mentally that, sometimes it goes great and it's like, that's fantastic and everything, works out. But, for the most part, there's not only big obstacles and big problems that you got to hit, but there's also the little day-to-day stuff that you got to keep up with. So, and it sometimes it grinds on you.
Yeah.
And so I like to say that the entrepreneurial journey isn't like a straight line up. It's sometimes like a corkscrew, and sometimes you end up going back, and then as long as you make the turn and you keep going, make the turn to go higher. That's the way to do it.
That's cool. That's some wisdom, man. I know you got a lot of it from doing what you do. Appreciate that. So it's not always a flight to the moon. What about what are ways people can, we as well add value for you, help you out, get involved in what you have going on? Are you trying to bring on more investors? Like, what are ways people can
We are actively looking for investors, and we, like to, educate you, help you out. So we've got a ton of information on our website, libertyfund.io. So not only can you, learn about investing in our specific product, but you can also learn about net lease property investing. And we also have a lot of information. We've got a free report on blockchain real estate. So that's something that, we like to add as much value, and, we like to be as educational as possible, because I want people to feel completely comfortable investing in, whether it's our products or whether it's somebody else's. But it's like, we want to have I'm interested in long-term relationships. I told you, I've had, some relationships in this business going back, 32, 34 years.
Yeah.
So, we're here to have longer term relationships. We want you to be, an educated investor. We want you to be comfortable with what you're investing in. But we also, have a lot of stuff. So I have a podcast called Nothing But Net, and that's where we explain, how to do net lease property investing. And we are also next week, and Matt is going to be there. I'm looking forward to meeting him in person and having a drink with him. The Blockchain Real Estate Summit. We're putting that on so that we're bringing people from the industry together, so that if you are a capital raiser, you can kind of see how to do, do a security token yourself. What are the, things that you need to put it together? And if you're a potential investor and you're interested in learning more about, real estate and blockchain and tradable private real estate, you could go to the, and so this might come out after that, but we're going to have a website up with different information that it'll be a resource for people to say, I want to learn more about this.
That's great, man. I'm excited to meet you and get you here in Opportunity City. So thank you for your time, and we'll keep it rolling and stay in touch. And I hope you have a great day. So appreciate everything.
Thank you. So the two websites that they can go to is libertyfund.io and blockchainrealestatesummit.com. But I really appreciate the time, Matt, today. It was a great call.
Yeah, man. And Nothing But Net podcast.
Thank you.
All right, guys. Thank you for tuning in. Appreciate you, Michael.